Hello, everyone. Welcome to another episode of the Gold Silver Bitcoin Show, brought to you by the GoldSilverBitcoin.com store. We are more than honored to be sitting down today with President of ProChain Capital, David Tawil. Thank you so much, David, for joining us today.
Thank you. Good morning.
So you've been keeping an eye on Bitcoin lately. What has stood out to you in 2021 as it relates to Bitcoin?
There have been multiple storylines. I think some of the biggest have been the push for an ETF. In the United States, at least, which we've finally gotten, at least on futures. I don't think spot ETF is coming very quickly on the heels of that. The second issue relates to regulatory, and there's a bunch of sub storylines below that as it relates to stable coins is one kind of high profile issue, which I think will get solved first. Then the issue of regulation of all other coins other than Bitcoin. And then lastly, the agreement or the pronouncement, I'd say pretty publicly and definitively, that Bitcoin will not be outlawed in the United States. And then with respect to crypto around the world, certainly adoption, I think, has been the top story, both in terms of use, in terms of recognition, in terms of adoption across individuals, across industries, and then across countries.
Why don't you think there will be a Bitcoin ETF approved anytime soon?
It seems clear that the SEC, at the very least, but probably more broadly, generally the executive branch of the government, and then also the CFTC, which regulates futures, they all don't seem prepared for the vagaries of the spot Bitcoin market. They do not have enough comfort over the cryptocurrency itself to allow regulated entities to invest in the actual cryptocurrency, as opposed to futures are much easier to regulate, because essentially a future is not holding the currency or the token or the asset itself, but simply pointing to a price of that reference, let's call it asset. And so it's much easier to go ahead and approve that. And so I think it's a bit away, because we need, frankly, a much broader shakeout in the regulatory regime as it relates to cryptocurrency broadly in the United States before we get down to the regulation of a particular asset in that industry, in this case being a Bitcoin ETF.
What do you mean by the U.S. needs a shakeout on the regulatory front?
We don't really have clarity in the United States on who exactly has jurisdiction over cryptocurrencies. Is it a commodity? Is it a currency? Is it a security? The answer may be, for each cryptocurrency, it may be a different answer. And do we want various regulatory agencies regulating different types of what we call cryptocurrencies because of underlying fundamentals? Or do we want to create in the United States a brand new arm of regulation that will regulate cryptocurrency as an asset class in and of itself? And we are far from a resolution on that. And so I think bigger picture questions need to be answered before we get down to the minutia.
Do you have a feeling of how they might be answered? For instance, will Bitcoin ultimately be filed under the commodity category, or do you think that there's other potential comings to pass?
I think on Bitcoin, it's an easier answer. I just don't think we're going to get that answer until there is a broader answer over all cryptocurrencies. I think they want to go ahead, they being, legislators along with regulators, want to go ahead and address the industry on the whole, and not just knock off a single asset, which is, in this case, let's see, in this conversation, Bitcoin. I think everybody agrees that it should be under the purview of the CFTC. Maybe there's a little bit of wrangling and pushback from the SEC. We may, however, get a crypto czar in the United States. If we do get a crypto czar or a special crypto office of regulation, Bitcoin may fall into that that office's jurisdiction. But in terms of existing regulatory framework, it seems most likely that Bitcoin will fall under the CFTC's umbrella or jurisdiction. And I don't think that there is going to be, I'd say a lot of pushback by the CFTC. The CFTC has actually been, I'd say, more accommodating, certainly in rhetoric, than the SEC has been in terms of posture with the crypto industry.
What does Bitcoin mean at a broader level for just humanity and society in general, in your opinion?
So I really think that one day there will be a religion devoted to Satoshi Nakamoto, if his identity is never revealed as a particular human being or a particular group of human beings. I really believe that this is a revolution, and the same way pioneers of personal computing, pioneers of internet, are heralded for their accomplishments. I think that this may be that level of change, and then some. We might not be as breathtaking by it in developed worlds as opposed to the breathtaking effect of it in underdeveloped countries around the world. What it essentially not only enables, but almost forces is everybody in the world becoming a saver, and a saver of value in a store of value that is certainly nowhere near as uncertain over time as the fiat currencies that a lot of people around the world currently hold, which are subject to enormous geopolitical risk. And, even in countries that we do think, operate normally, they don't operate nearly as smoothly and as dependably as we're used to, let's say, here in North America or Western Europe or, Far East Asia. There are lots of jurisdictions around the world where currency is a very uncertain part of life. And the ability to migrate, first of all, lots of people that already hold that currency in their local banks or in their local physical form, to migrate them to another much more stable currency, much more portable currency, is incredibly important. And then to go ahead with, a smartphone, turn everybody in the world into a saver, into an immediate saver in a dependable currency, I think is just, again, revolutionizing.
I don't know what a religion of Satoshi would look like, but I guess I could ponder some tenets, a individual named Alan Stevo, who used to be chief of staff at Kraken and has been around the Bitcoin industry for a while, gave a talk in 2019 at the Bitcoin conference in San Francisco. It was held at a parking garage, which was much different than 2 years later when it was held at basically like a conference center, a large Miami conference center. And Mr. Stevo talked about how he believed that Satoshi Nakamoto was developing a technology that was inspired by Austrian economics type thinking. So he pointed towards the Genesis block, in which there's a headline that references the bailouts ongoing in the UK at that time, Chancellor on brink of second bailouts in the Times UK, and some other, parts of the kind of Bitcoin story, the Satoshi story. So perhaps one of the tenets of religion of Satoshi would be like sound money, for instance, or a deflationary money. In your opinion, David, what do you think would be some of the tenets of a religion of Satoshi?
I think it's more than anything democratization of finance, and also a dependability, but yet decentralization of the system. And again, I'm not an evangelist. I am a religious person. I already have a religion. But that said, certainly there are enough people that are incredibly engaged by this. And I think over time, people will look back and say that this was a real turning point. I don't know. Again, I don't mean to sound like an evangelist, but in the history of the world. And there are some great, to your point, there are some great, I'd say, societal tenets that have been created by this, that have been, good, positive things reinforced. So I think there are really positive morals and lessons to be drawn out from this. And I don't think it would be a particularly bad religion, frankly, right? All the things that I think Bitcoin and decentralized finance and blockchain support are generally good values.
So the line between being an evangelist and a more sober analyst of the Bitcoin industry, or academic even, for me was very clear up until about 2020. And in 2020, I saw so many changes taking place that I thought that they all pointed towards further Bitcoin adoption and a Bitcoinization of certain sectors of society even. I don't really think we're at Bitcoinization quite yet. However, in El Salvador, one might argue we are there. So certainly we have kind of, in my view, whereas from the period of like 2012 to 2020, it's an experiment. It's an experiment. Just like all the developers were saying behind Bitcoin at that time, the Jeff Garziks of the world, the Mike Hearns of the world. It's an experiment. It's an experiment. It could go wrong. It certainly could still go wrong. Barring some major event in Bitcoin, the trend seems to be towards it and towards the other cryptocurrencies as well. I've had many guests on this show recently who have postulated that silver's dead. Silver was demonetized. And if it wasn't demonetized already, then certainly Bitcoin hammered some of the finalizing nails in the coffin. Mike Maglan came on the show and he actually argued that gold had killed silver before Bitcoin came around. However, I've also had other guests on this show, including Mike and others. In Mike's terms, Bitcoin is replacing gold in individuals' portfolios. In some more extreme terms, Bitcoin has demonetized gold and silver. There's an individual named James Luis. He is of the Independent Speculator, I believe, and he argues that silver has been demonetized. I'm not sure why exactly he argues that, but it does not have to do with Bitcoin. However, I would say that Bitcoin very likely played a role in something like that. So could you talk about the trends as it relates to perhaps, Bitcoinization, hyper Bitcoinization, and from a, more academic or sober perspective, rather than being evangelist, because it could still fail, but I would submit that what's most likely to happen in the event that there is a Bitcoin failure, that it is a big event, that it isn't some waning in interest or another cryptocurrency achieving faster transaction times, cheaper transactions, etc. I think there's going to have to be a cataclysm.
Okay, this is that's a lot to address. So let me say a couple things. First of all, I think Bitcoin is unique. I do believe, in the vein of let's call it the Michael Saylors of the world, that there is something that cannot be replicated. A few things that can't be replicated in terms of the features of Bitcoin. So I think, and that's why our portfolio certainly has, a substantial emphasis on Bitcoin holdings and Bitcoin trading. So in terms of other cryptocurrencies, first of all, functionality, a lot of them endeavor to do things that Bitcoin can't do, won't do, will never do. And also, for those that don't, copycats, let's call them for a second, there are known founders of those coins that can decide, change protocol to go ahead and issue additional tokens and so on, right? There are incentives not to, don't get me wrong, but the scarcity point on Bitcoin is also something unique. In terms of, a bunch of comments you made relating to gold and silver, one of the great things about new asset classes is that it's new. And so people come to new asset classes from very different disciplines before coming to that asset class. And so Mike Maglan, who's a fantastic guy, comes to it from, although he's a Bloomberg guy, so he's exposed to everything and anything, nevertheless, he comes to it from a commodities perspective. I'm not a commodities person. I'm not a currency person. I am not a high frequency trading person. Those are not what I do. I actually come to this world from a very different perspective, although my partner is very much a crypto-minded professional, Stanford PhD, incredibly sophisticated when it comes to programming, has been involved in building mining operations, has an engineering, frame of mind. I come from a very fundamental bottoms up investment analysis point of view. I actually started my career as a lawyer. I was a bankruptcy and corporate restructuring lawyer. And then before, being involved in crypto, I was involved in turnaround investment. So for me, all of this, the way I look at crypto is frankly, what does it do? What's the added value of it, right? And I'm sure, based on my comments surrounding, the evangelism and what it can do for the world and things like that, I'm sure it rang through. So in terms of disintermediating other things, I'm not particularly concerned. It doesn't even excite me. Gold and silver, in my mind, will always have a place in the world because people like jewelry. And, in very traditional places, that may always be the medium of exchange. I don't know, the medium of value. And I'm okay with that. You don't need to own 100% of market share in order to be successful. You just need to own more than you did yesterday and the day before that, and increasingly more and more. Once you plateau, I think things get a little bit less interesting, but certainly, development will always allow for, additional value on an inherent basis, not necessarily from increasing market share. So that's a long way of saying I really don't have much by way of commentary on gold and silver. I am involved, I think as we've maybe conversed over email, I am involved in oil, being the CEO of an oil and gas company that's based in Argentina and is listed in Canada. So I know a lot about the oil industry, but again, the way I look at oil is very much from a fundamental perspective, a supply and demand, real plain Jane, type of viewpoint, as opposed to, a very sophisticated, high frequency trading perspective.
What are the fundamentals in oil today?
To me, the biggest, look, you can never ignore data. I think anyone that does that at their peril, right? You need to always be cognizant of what is the demand look like today, and what's the trajectory. Similarly on the supply side. Beyond those data points, though, as an event-driven investor, I think about, well, what events are occurring or will occur that will change those trajectories, either reverse them or, make them less or more steep. And, in the corporate investing world broadly, one of the most underreported or underemphasized stories during COVID was almost the slamming on the brakes of oil and gas development by majors and the turn almost exclusively towards renewables. It happened for two reasons. First of all, the price of oil went to 20. Investors got pissed because they said, look, you've been making incredible money for a really long time. Oil was at $100 a barrel at one point, and we didn't get any money back. As an investor, we didn't get any dividends. You simply took that money, profits and all, and slammed it back into the ground, only now to be subject to $20 barrel oil, and we're now losing money on an overall enterprise basis. So with respect to that alone, there was an adjusting of focus by companies. Companies pledged to give much more money back to shareholders. At the same time, the totality of what was building in terms of ESG concerns, environmental, carbon zero, all that stuff came to a massive head at exactly the same time, which essentially reinforced the first decision, right? If we're not doing it for this reason, we might as well do it for that reason. Or we might as well just do it and kill two birds with one stone, or appease two groups of people. And the pressure from an environmental perspective came from everywhere. It came from shareholders. We saw proxy contests on it. It came from governments. It came from courts in the case of Shell and the Dutch court. There was enormous pressure levied on oil majors. And so as a result of that now, there is so much less money being put into CapEx, being put into, I'd say future major acquisitions. And so we're going to have a problem. We're trying to move, on the broad front, we're trying to turn the largest ship, which is the world, right? The consumption of the entire world that has until now consumed oil to not consuming oil. That's going to be really hard. There's a lot of cutback. There's a lot of change. There's a lot of adapting to that. But at the same time, as you're adapting to that and the transition period, there's still a need for oil. And if we're in an expansionary environment broadly and an inflationary environment on top of that, price of oil or the demand for oil is going to continue to go up. And so the transition is going to be painful. The question is just how painful. It's going to be painful. I just don't know how much, and what threshold does the world have for pain?
What kind of pain?
Oh, it's just financial pain. I don't think I'm not a scientist. I'm not a climatologist, so I don't know. Excuse me. I don't know in terms of additional environmental damage that may be irreversible. I don't know what that pain looks like or how it's measured necessarily, or frankly how accurate the measurements are. Again, not to throw skepticism, but if as a matter of dollars and cents, and also as a matter of principle, lots of private actors around the world are trying to go ahead and become carbon neutral as quickly as they can. A bunch of governments around the world going to a place and agreeing, with very soft words and very soft commitments and immeasurable pledges to go ahead and cut greenhouse gas emission. I mean, I certainly don't think that that's as powerful as private enterprise going ahead and putting dollars to work. I think private enterprise, first of all, tries harder to go ahead and meet goals. Certainly they try hard to find loopholes too, but they try to meet goals, and they have the dollars to do it, as opposed to countries that may not necessarily have those dollars, or may have to go commit them elsewhere, and also, may put down plans where current leadership who shapes those plans will certainly not be around for when those plans, get completed, as opposed to a private enterprise, which has a very, a lot better chance that same leadership will be around.
You mentioned inflation a bit earlier, and certainly inflation headlines are not slowing. Transitory is being met with skepticism now as an inflationary concept of our times. Some of the headlines this morning include Fed is losing credibility over its inflation narrative. Inflation surge pushes gold to 5-month high. Tesla's Elon Musk weighs in again, now on inflation. How inflation, Medicare, and taxes could eat away at your Social Security cost of living adjustment for 2022. And on and on. Washington Post, on inflation, it's past time for Team Transitory to stand down. What's your view of inflation currently? Has it had an impact on the oil markets or generally?
Yeah, I think it's a double whammy, on the oil markets. I think general inflation plus just fundamental inflation because of the imbalance in supply and demand, leads to a very bad result. And oil is a very basic element in all parts of the economy. And so, as an input, also as personal consumption and so forth. So, certainly I think it's bad because of the reliance on oil in so many pieces, it almost has a leveraging effect, right? Because it's an input into, let's just say that, the tires that make my vehicle, but it also goes into the gas tank of my vehicle. So I get a double whammy, potentially on the price of oil rising. So, it's not a good thing. Again, the more interesting thing, forget about not a good thing. I'm sorry, I take back that comment. It's not a good or bad, it just is. It doesn't help economic expansion necessarily because costs, are higher. In terms of the interesting thing to me, to go back to a point that I raised earlier, is what's the threshold, right? Is $5 a gallon or $100 a barrel simply for nothing other than, sticker shock? Does that call everybody, into the meeting? Is it an all hands on meeting at that point? Are the sirens blaring that something needs to happen, change? I don't know what, but is that it, or is it something else that's going to go ahead and trigger that? We're going to get to that point, and we're going to far surpass that. I really think that we have the ingredients. Not necessarily it's going to come to pass, but we certainly have the ingredients to go $1 plus higher at the pump, within even a reasonable amount of time, 6 to 12 months. But look, the Fed has been asking for wage inflation for such a long time, okay? And so has the president, and so have many activists. They got it. We have wage inflation. But wage inflation is not necessarily coming without all sorts of other inflationary effects. I'm not saying all the inflation what we're seeing is coming from wage inflation, but what I'm saying is, wage inflation cannot just be given, and everything else stay static. It just doesn't work. So if we've got, super low unemployment, the most job openings, way outweighing how many people, are not in the workforce. Well, what do you expect? The numbers just need to go higher all around. You got to pay truckers, double what they were used to getting paid. Do you have any illusion that the trucker that's now getting paid double, who's paying double to fill the gas tank to drive the truck, is the milk in the truck going to stay the same price? It can't. It can't possibly stay the same price. So, it's a domino effect. What's not good is that if all we did was raise the water level, right, and there was really no increase in, quality of life for anybody or, wealth for anybody, then it was a futile exercise. Right, we might as well just have added a zero to everything, and called it a day. Could have gotten done a lot quicker.
A lot of the small businesses in particular and corporations, many of which are franchises, however, so there's at the local level a local business owner who are lamenting their ability or inability to get workers. And it's tough for me to understand the math here because certainly, I mean, in much of the US, at least where I am in Idaho, there hasn't been so much stimulus to justify not working for 18 months now or not working consecutively for those 18 months. And perhaps I'm not sure if people have moved back home as a result of the pandemic and therefore they don't need as much money to get by, or what other explanations would be for that. Do you have any inklings?
I don't. I'm sure the answer is multifaceted. My guess is that there is not even one predominant storyline or reason. There's probably the same way that COVID shook up people's lives in so many different ways, people getting ill, people dying, people getting ill to the point where they have lasting effects and so forth. My guess is that people also reacted to what happened in so many different ways. And when I say reacted to economic circumstances, familial circumstances, health related circumstances. So I don't know the answer. I'm left somewhat dumbfounded, however, by some of the same questions that you're asking. I mean, let's go to the other very far end of the spectrum, which is the gainfully employed, as opposed to, the folks you're talking about are the unemployed. The gainfully employed in some of the biggest cities, are now working harder than they ever have, getting bigger paychecks than they ever have. Their businesses are bringing in more revenue than ever. And how the housing markets are on fire. And I'm similarly left asking, how's this? How's this possible? Who's paying for all this? Who has done so well, as a result of the pandemic, that is able to afford all this? And if the answer to all of the above is simply just inflation, again, I don't think that's good.
You discussed the retail apocalypse in your writings. What is the retail apocalypse?
The retail apocalypse it started as the demise of the department store, and then a resounding gain, almost unstoppable gain in market share by e-commerce and e-tailing. It has shifted into a bunch of e-commerce based direct to consumer companies like Warby Parker or Allbirds. I'm sure we could come up with a bunch of others, Casper. And now their, I'd say, return, or their foray, I shouldn't even say return, their foray into a store-based model, a bricks and mortar model. And, someone trying to figure out through all this what the ideal model is. And I still don't know if we know. I mean, clearly Amazon is a champion, don't get me wrong. And clearly Walmart, at least for, my lifetime, will be Walmart as we know it. But what is exactly the right recipe for consumer goods? And I don't think anyone's figured that out. I don't think the direct to consumer, although it was a huge paradigm shift and it seemed to destroy department stores, or even multi-channel, bricks and mortar. I'm sorry, not multi-channel, but multi-product offering bricks and mortar, other than, I'd say mass merchandisers and dollar stores or off price. Even though they've succeeded in that battle, the direct to consumer paradigm I don't think has been as successful as people would have thought or wanted it to be. Very few of them have reached cash flow positive, levels.
You also shared a post recently titled "Dozens of NYC Hotels in Jeopardy as International Tourism Set to Return." This is from the New York Post. Tourists are poised to swarm the Big Apple during holiday season after an international travel ban was lifted last week, but it might be too little too late for dozens of New York City hotels. The pandemic has already felled a number of famous properties, including the landmark Roosevelt Hotel near Grand Central Terminal, the Excelsior Hotel on the Upper West Side, and the century-old Hotel Pennsylvania across from Madison Square Garden, which now faces the wrecking ball. More than 30 other hotels, mostly smaller ones that haven't yet reopened, are at risk of being sold or going dark for good, the Post has learned. The list, tallied by GAM Hospitality Advisors, includes swanky boutiques like the Hudson, the chic Midtown venue launched by Ian Schrager in 2000, as well as the Paramount, Avalon, and Roger hotels. Said GAM Hospitality President Jeffrey Mills, the burdens that have been put on them by the lack of tourism over the 20 months preceding and by the city and the labor union will likely result in their permanent closure. So, retail apocalypse, commercial property apocalypse as well?
Commercial property apocalypse, hotels definitely different than, I'd say office space, right? But yeah, in New York City, New Yorkers are an incredibly headstrong crowd and also very proud people. I used to be, a city dweller for over a decade. And I understand why, and I understand the draw and, the electricity and so forth, and certainly the cultural epicenter could be of the world. And there is certainly a draw to it. Question is whether COVID has changed that paradigm either for good or for long enough to debilitate the city as we know it. They're praying. I mean, everybody in New York City is praying. Anybody that's got a stake in that city in some form or fashion, whether it be living there or working there or employed there or invested there, is hoping that it comes back. They're working against a couple of really difficult challenges. The one, the tourist issue is what it is. I don't know, how quickly. I actually traveled internationally recently. There was the great part of it, and then there was certainly, there's a headache. It's like saying, was international travel exactly the same after, God forbid, September 11th? No, it was not the same. And is it ever going to be the same? No, it will not ever be the same. Will COVID change international travel in a way that is never going to change? Probably. Will we get used to it? Probably. How long will it take? I don't know. So that's issue one. The other issue, which is commercial real estate relating to office space, I think is a much more fundamental issue. And I think that the headwinds there are stronger because people got used to working from home. Businesses adapted to workers working from home or other places. And businesses, from a dollars and cents basis, it's much more profitable to have people not sitting in an office, all other things being equal. So you can reduce, your rent costs. So I think there, it's a bigger, probably more impactful issue.
I believe you've dealt with debt professionally in your career. I'm curious what your view is generally of it.
I think okay. So I have been a credit guy for a lot of my life. I was a restructuring professional, and then I traded distressed debt at Credit Suisse for a number of years. And corporate lending market is very, very healthy. We're still at incredibly low rates. Certainly, if we're in an expansionary environment, inflationary environment, you can afford to take on more debt, more leverage, right? In the hopes that your top line is going to grow. Your debt costs will remain static. If you could fix them, that's great. Your top line will grow, and your expectation is that you'll either be able to grow out of the debt or easily refinance the debt whenever it becomes mature. I think that that's generally the case in the corporate world. A lot of debt, a lot of lending has moved out of traditional lending channels and into what people call non-traditional lenders, which are essentially alternative providers of financing, some type of fund that is structured to make certain types of loans, size, industry, geography, so on. But nevertheless, on the whole, debt markets are very healthy. Interest rates go higher. That's when debt markets start to become less certain. Certainly, they need to adapt to a higher rate environment. The whole corporate credit stack needs to reset itself. In terms of personal credit, however, and that's where I think the question was, kind of angled towards. I think personal credit, I don't know what the metrics are. You would think, the COVID-19 pandemic scared the living daylights out of the average consumer to have as little debt as possible. However, with credit being easy on the one hand, and B, maybe some consumers being under the illusion that the government's going to be there, come what may, they may be stretching themselves to places that are just unreasonable. If you look at, call it housing prices and used car prices, which are the two largest ticket items for consumers, the numbers have exploded. I mean, just berserk. Housing markets have been crazy everywhere, right? You're in Idaho. I think Boise went nuts by all measures. Right? I think I read a story about that. Right?
Yeah, it's so competitive here that renters are bidding each other up, for instance.
And that's for rents, right? That's not even for purchases.
No, that's for rents.
Right. So, I mean, people are just extending themselves in incredible ways. And then the other thing is that, used car prices, we've seen used cars be sold higher than their original sticker prices, right? That also has a lot to do with, supply chain issues. But certainly, based on those numbers, those metrics, it seems like the consumer is back in a big way. And if the consumer is not, making oodles more money, then it's got to come from somewhere. And so maybe it's coming from credit.
What's the post-mortem on 2021 if you were going to write an article or just give a brief rant?
There's probably been a tale of two cities. There's probably been the tale of growth and blockbuster transactional activity. But then there's been, I think, a whole other world, I'm not going to say of pain necessarily, but certainly stagnation and maybe workouts that we're not hearing about when it comes to things like real estate or people struggling, with the knock-on effects of COVID and, not having, enough income. I think there's a lot of that doesn't necessarily get reported on. For every story, in the news, or let's say 4 stories a day on Bitcoin and crypto, right? There are 4 other stories not getting written. And I think a lot of those other stories are probably boring stories, right? If you look at the average value stock, it probably hasn't done very well, over the past year if it didn't have some headline moving, activity. If all it did was kind of plod along, report earnings, didn't announce a deal, didn't announce a major refinancing spinoff, whatever, attract a bid, so on, and it probably didn't do much, excuse me, over the past year. I mean, in some sense, rising tide, raises all the boats. But certainly there are those that have risen like rocket ships over the past year. And I think there are a lot of those that don't necessarily get covered that have probably not done much, by way of interesting activity.
And then what about 2022? What are you anticipating, or what metrics are you keeping an eye on most?
I like to always be expecting surprises. They usually don't come when people are screaming about them the most. They usually lag. And I think people screaming about inflation, it's probably going to get a lot worse. Growth investing, venture investing has been too hot to handle. The endowment returns of the past year have been eye-popping, I think all record-setting, and it's only because of their venture investment returns. That can't stay like that for a very much extended period of time. That has to stop. So I'm expecting some change, some downdraft, and it usually comes from an area or a place that we don't necessarily expect it. That's why it's not priced in. That's why the market gets rocked when it happens. And so I think in the earlier part of the year, people just say, give me the same as 2021. And then somewhere along the year, we will have some, I'd say some either single or a couple of events that will change sentiment. It's got to change. It's not healthy. Where we're at right now. Euphoric is not a great thing. People do stupid things.
What is ProChain Capital? Can you tell everyone about it?
Yeah. ProChain Capital is about a 4-year-old crypto-focused hedge fund. It's like the rest of the sector, has generated very positive returns. The fund is based on fundamental principles. The way that it manifests itself in terms of composition of the portfolio is that we afford our LPs, our investors, the benefit of the entire crypto ecosystem, regardless of the form of investment that we need to go ahead and access in order to have exposure through the fund. Meaning, we invest in cryptocurrencies, the likes of Bitcoin and Ethereum, all the way down, to much lesser known tokens. We also invest in equities, both long and short, of companies involved in crypto activity and digital payments, which is going to be, I think, an increasingly large world. So everything from Coinbase to PayPal to Square to Visa to MasterCard, we could be involved in MicroStrategy, Tesla. There are a lot of names in there. And again, there's good reason for a lot of those names to, they're very much event-driven, headline-driven situations. So there's good opportunities, both long and short. And I think a lot of companies are going to look to the public markets to gain access to capital, even though they start off as, venture funded enterprises. And then we also have a piece of the fund that we invest in venture stage companies. For the most part, we've been investing in early stage miners that mine Bitcoin and other cryptocurrencies, either on a renewables power basis or on a cheap long-term power contract basis. And any access to those types of investments, you really can't get through the public markets or through crypto. It takes private investments to go ahead and get exposure to that. We've also had some other types of private investments as well that are part of the crypto ecosystem.
And on the ProChain Capital front, a significant allocation is specifically in Bitcoin, correct?
We do. We have a pretty large position. I mean, it's a pretty diversified fund, but we do have, a sizable position to both Bitcoin and Ethereum. I think, we don't do window dressing for the sake of window dressing. So what I mean by that in this context is we're not going to tell our LPs we're invested in all these altcoins that you never heard of and all these unknown equities and all these really esoteric venture investments. We're not ignoring, the strongest, the best, the truest, that are in the sector. We think that our investors should have exposure to that. Then we're there to actively manage that exposure. And thankfully, those investments in the larger tokens have done incredibly well for us. A lot of times the risk-adjusted return in Bitcoin and Ethereum is going to be better than, a token that has the potential, to increase 1,000% over 12 months, but it could also go to zero over the next 12 months.
We've had the honor and privilege of sitting down today with David Tawil, the president and co-founder of ProChain Capital. Thank you so much, David, for joining us today.
Thank you, Justin. I appreciate the opportunity.
And thank you, everyone, for listening.